I'm back with another trade recap, and yeah, let me show you guys how I was able to make around $100 today. It's not too much. I mean, like a lot of you guys might think that $100 is not too much, but like as a trader, keep in mind that when you go work a 9 to 5 job, you get only paid maybe $20 or maybe $15 an hour. Since I come here like trade on 10 minutes, I like for an hour I get paid like $100, but that's only I'm learning the skill. Like once you have a lot more capital, imagine we had like a 200k account, that would have been around $2,000. And if it was a 100k account, 1% would have been like $1,000. So I'm trading with low capital and I'm okay with that. And I have been in winning streak for this whole week, and last week I think I lost only one trade last week, but it feels good. I'm getting my confidence back. But yeah, let me show you guys that I'm not capping. Look over here. This is from like yesterday that we took trade 140, and this is from today $111. And yeah, let me go on the chart, show you guys the trade that I took. So coming into the day, I was bearish for the day. To be honest, there was few reasons for me to be bearish today. Number one, on the 4 hour time frame, like we were too much over, but I really like wanted price to come equilibrium or like this 4 hour fair value gap. And if you go on the hourly time frame, look, it was the same. Like this is like the market open. I'm making the video right now. So this is right around when market opened, this big candle to the downside. But I did not see any kind of confluence to the downside. But after we took out some liquidity, my bias changed. And yeah, so let's go on the 15-minute time frame so that I can show you guys. So before the market open, I really wanted the price. Like there was not too much to look out for, because if you look on the 4 hourly, we already had swept this liquidity on the higher time frame over here. Let me just remove this. Over here. So that's why also another reason for me to be bearish, because we had already swept higher time frame liquidity. But yeah, but on lower time frame I did not see anything, and I was targeting this liquidity, this one, and this one, this loss over here. But when the market opened, like let's go on the 5-minute time frame. But as you guys can see, when market opened, we did not see like anything like price. Okay, price did go back up, took out like this high and this high again. Okay, cool. We are looking for confluence to take short, but there was none. Like I did not see any confluence. Like this is right around 1550 where I usually take my trade. But look, we did see a big leg to the downside. Price moved up, fell into this fair value gap, inverse fair value gap. We disrespected this bullish fair value gap over here. Cool. This candle closed like this candle was at 48. It closed, and there was not like I was not gonna take the trade over here, but just based on that. Like, okay, all of my confidence got hit, but 1550, the time frame, like the micro or the time where I take my trade wasn't there, so I had to wait. And when I waited, look, price like this candle, price like this just jumped to the downside. Like this was just a big candle, a big push to the downside, and price came and took out, as you guys can see, this low and this low over here. And then my bias changed. I was looking for longs after that. Because why? Let's go on ES. I did not take the trade on ES. If I had done that, bro, this would have been one of the craziest trade for me this whole week. And if we look at on the ES, our price was already pushing lower. Like we already saw the big push to the downside on ES, which fine came and took out like that low, fell into this fair value gap. And as you guys can see, we were looking into this like bearish fair value gap. Like there was two setups that I really wanted to take. This was this one, and this was on the S&P 500, which I ended up taking this trade. But yeah, let's come back to the NASDAQ. And yeah, my confidence was just like, look, inverse fair value gap. We disrespected this bearish fair value gap. Boom. We broke 1 minute break structure over here to the upside. And then I just got a bad entry. I just waited for the price to maybe wants to come and retest to this price range over here. Like just something. It's not any kind of confidence. It's just me making sure. And then after that, we saw this candle closes the bullish, and just I entered, and I got entered right around there. And my take profit, first take profit was this high. Like this was my first take profit over here, and it got hit really quick, and I moved my stop loss at break even and let 50% of my position to go for all of these take profits. But I got stopped out at break even, which I ended up only making like $100. But something that I have to understand right now is that my risk reward ratio is not that good. Like I take the trade, but yeah, the idea of me managing my position is that like when my take profit one gets hit, I move my stop loss at break even. Like it happened yesterday also, we got stopped out at break even. But today, boom, we got stopped out at break even. But imagine if I did not put my stop loss at break even on yesterday's video, just go watch there, the trade recap, the trade that I took yesterday, I would have lost 1% instead of making money. That's why I like this. Like when my TP1 gets hit, I move my stop loss at break even. Like I don't, like I just manage my risk. I do that. But yeah, I got unlucky today. Cam took me out and went all the way up here and took out this final take profit. For me, I would have taken out all of my position over here, which was this take profit was based on, let's go on the forward time frame. It was this 4 hour high over here, or you could see the hourly highs over here as the final take profit. But if we go on ES, like ES would have been much better trade for us. And on ES, it was the same thing. We could see that market open, we see a big push to the downside, and then cool, we took out this 5 minute low over here, this low, boom, and then we see price to move up to the upside. I did not see anything to just take a long position based of this over here. As you guys can see, there is no confluence, and then we see price comes to the downside again, takes out these lows and fill into these fair value gaps over here, like fills out into this fair value gap and ends up taking out even this 5 minute low over here. And then we see price giving us confluence to the upside. Boom, inverse fair value gap, price did come into this, we disrespected right around here and we broke structure. So if I had entered this trade, I would have entered based on this candle. Maybe I had gotten a like better entry or not that good entry, and that would have been based on this, which would have ended up in 1 to almost 4 risk ratio trade. So now two main things that I need to do is just work on my risk reward ratio. The trade that I take, they do have a good risk reward ratio, but the risk management that I do, moving my stop loss and break even, like cost me not making more money. So that's something that I have to do. And the other thing is that I need to understand which pair is going to give me better risk reward ratio trade. Like, is it better to take the trade on NASDAQ or the S&P 500? These two things that I need to learn. But I'm glad that I'm consistent. I have been in winning streak for past almost 2 weeks. And yeah, see you guys on the next video. Let's hope that we continue making this money, like we continue making profits and we don't break the winning streak.